to be a company that is also environmentally friendly, socially responsible, and well managed. The implementation of ESG in investment management and ESG asset under management is on an upward trend. In 2016, asset under management global ESG showed a figure of $22.9 trillion US dollar, and in 2020, it has almost doubled up to $40 trillion US dollars. In practice, the ESG regulatory policy is regulated in POJK number 51 of 2017, which contains the implementation of sustainable finance for financial service institutions, issuers, and public companies. Bni has become the first mover in starting a sustainable ESG business, having done so since 2017. The following are the measures that have been taken by Bni to achieve this goal of sustainability: eliminating hunger, achieving food security and good nutrition, also promoting sustainable agriculture, ensuring access to affordable, reliable, sustainable, and modern energy sources for everyone, building inclusive, safe, resilient, and sustainable cities, taking urgent action to combat climate change and its impact. Furthermore, starting from 2019 and until 2023, Bni has been implementing a Phase 2 ESG roadmap by executing several things, namely the determination of KKUD based on the palm oil sector and renewable energy in the banking business segment program, a sustained financial assessment and implementation of renewable energy, the implementation of sustainable finance and management of forest resources, a sustained financial assessment and implementation in manufacturing, food, and beverage industry, the implementation of sustainable finance in the manufacturing, food, and beverage industry. The sustainability commitment of Bni is carried out to support the achievement of development goals through 5 pillars. This is stated in the blueprint of the Board Directors' Decree number KP/412/DIR/R dated December 4, 2018 regarding the 2019 Sustainable Finance Action Plan or RAKB. It should be noted that the pillars and strategies of Bni have 5 important points that are put forward by adjusting the core of ESG. Bni for Indonesia, Bni for customers, Bni for the environment, Bni for the community, and Bni for employees. To support the success of this program, let's start by becoming someone who also cares about the environment, society, and Indonesia. Let's race!
Along with the global business development entering the digital era, Bni, as a trusted bank, continues to innovate and to deal with business and global market demands. To simplify your corporate transactions both domestically and internationally, Bni provides you with a digital transaction solution, Bni Direct. Bni Direct is a solution provided by Bni for corporate customers to perform their financial transaction activities from their accounts at Bni. To give added values for Bni customers located overseas, Bni introduces a new solution from Bni Direct, Bni Global Transaction Banking. Your international transactions are more secure with Bni Global Transaction Banking Service, which has overseas branch offices network support around the world. Bni Global Transaction Banking provides added value to support Indonesian companies to go global. Therefore, we focus on presenting end-to-end integrated solution according to customers' needs. Bni Global Transaction Banking, the next level of banking.
Bisnis penuh ketidakpastian, ekspektasi terus diuji, segala permasalahan jadi pengalaman. Yang terpenting adalah bangkit dan mulai lagi. Dengan BNI FX menjawab semua kesulitan. Lihat, analisa, dan gunakan kesempatan demi meraih hasil tertinggi. Bersama BNI FX, solusi transaksi valuta asing Anda penuh kemudahan dan kenyamanan.
Waktunya mulai bisa apa aja dari satu aplikasi. Direksi mulai adaptasi cara bayar baru. Bisa kan pakai kris, jadi mudah. Yuk buka tabungan BNI dan aktifkan BNI Mobile Bank. Mulai bisa apa aja sekarang.
Ini cerita anak muda yang berani, sibuk sampai nggak bisa ngajuin KPR di bank.
Iya nih,
No worry, kan ajuinnya praktis dengan sentuhan jari.
rumah atau liburan ya.
Stop galau, angsurannya panjang.
Good morning, ladies and gentlemen. Welcome to PT Bank Negara Indonesia Persero Tbk Analyst Meeting full year 2021. Thank you for your participation, and we believe you are well during this difficult time. We will proudly introduce our members of Board of Directors who are here with us virtually or live in our head office building. First, we have Mr. Royke Tumilaar, our President Director or CEO. Next, we have Mrs. Adi Sulistyawati, our Vice President Director. Mrs. Novita Widya Anggraini, Managing Director of Finance. Mr. Henry Panjaitan, Managing Director of Treasury and International Banking. Mr. Silvano Rumantir, Managing Director of Corporate Banking. Mr. David Pirzada, Managing Director of Risk Management. Mr. Yebe Haryantono, Managing Director of IT and Operation. Mrs. Corina Lela Karnalis, Managing Director of Consumer Banking. Mr. Muhammad Iqbal, Managing Director of Micro, Small, Medium Enterprise. Mr. Sis Apik Wijayanto, Managing Director of Institutional Relations. And Mr. Roni Venir, Managing Director of Service and Network. Mr. Royke Tumilaar will begin the presentation with several management highlights. Mr. Silvano Rumantir will expound on corporate transformation progress, wholesale banking highlight, and our best-in-class ESG. Mrs. Novita Widya Anggraini will proceed the presentation with the detail of our full year 2021 results. And following that, Mr. Henry Panjaitan will address our liquidity update. Mr. David Pirzada will describe the bank's approach to loan quality and risk management strategy. Last but not least, Pak Yebe Haryantono will wrap the presentation with our digital initiatives. Ladies and gentlemen, our corporate presentation can be downloaded through the link we provide in the chat room. Should you have any issues, please kindly contact our investor relations team at ir@bni.co.id. Any questions are appreciated. Please send your question to our email address, or you can simply send your question in the Q&A section on your Zoom apps during the Q&A session. Please remain silent during this presentation, which will last around 30 to 45 minutes. And for today's event, we provide interpreter or translator feature for you. However, all the presentation will begin in English. Therefore, all attendees do not have to click the interpreter button during the presentation. The interpreter button will work during the Q&A session if the answer delivered in Bahasa Indonesia. And now, to begin the presentation, please welcome our CEO, Mr. Royke Tumilaar.
Thank you, moderator. Good morning, ladies and gentlemen. We closed 2021 with a net profit of 10.9 trillion, triple than the 2020 profit, and we believe it is almost 10% above the market expectation. This is supported by healthy loan growth at 5.3%, resilient net interest margin at 4.7%, and the asset quality improvement that resulted in cost of credit construction to 3.3%. While these ratios met the 2021 guidance, we totally understand that there is a room for improvement going forward. For this year, we expect loan growth to accelerate to high single-digit level and the credit cost to improve significantly by more than 1% point. As for net interest margin, we saw some pressure on quarter 4 last year as we built liquidity buffer in low-yielding government bonds and central bank placement. This decision was taken to secure our liquidity ahead of potential hike in interest rate this year. Our loan to deposit ratio was very healthy at only 79.7%. A glance of our recent quarterly performance, PPOP was resilient quarter on quarter. This enabled us to build slightly higher provision coverage for the sake of being prudent as the world is still grappling with the threat from Omicron variant. We believe this is a conservative approach as our loan at risk were actually improving by 2% point during last quarter. Ladies and gentlemen, entering 2022, there are 3 key economic themes that we are anticipating. First one is GDP growth recovery momentum driven by government vaccination program that should achieve national herd immunity by second quarter this year. Second, we expect inflation rate to accelerate up to 4% level, which we believe is still a moderate level of inflation for developing country. Lastly, as a result of US tapering, we assume around 50 basis point benchmark rate hike in Indonesia, which should be able to contain exchange rate volatility risk while at the same time not hurting economic recovery momentum too much. The implication of these economic themes to our bank is stronger loan growth and better asset quality, obviously. On a static basis, Bbni is a net beneficiary of interest rate hike as the amount of our floating rate loan is bigger than the amount of our floating rate liabilities. During this rate hike cycle, we see opportunities to grab market share in lending, especially toward low-risk customers, supported by our competitive advantage in terms of funding costs. We don't expect to see margin expansion this year, but we expect to build a bigger and stronger good customer base for the long term. Ladies and gentlemen, our vision is to be a financial institution to excel in service and performance on sustainable basis. This will be supported by our DNA, which a reliable provider of digital-based integrated financial solution with international network advantage. Our 5-year strategic planning is divided into 3 steps. For the first 2 years, including this year, 2022, that strategic initiative prioritized on improving asset quality, strengthening digital capability, building a sustainable business in lending and funding, strengthening our capital structure, as well as upgrading our talent management. After we build a strong foundation in the first 2 years, we aim to have a best class in capabilities by 2023-2024. This included a capability in a bionic or hybrid banking to deliver superior customer journey, a capability to offer a holistic business solution by focusing on multinational companies, as well as data analytic capability and culture. By having the best capabilities in the industry, we have a vision that by 2025, BNI will be ready to become a financial institution that provides solutions beyond banking. With the advantage of an integrated wholesale business, market lending subsidiaries, as well as strong international network to connect local companies with global markets. The vision and strategic target roadmap are prepared to ensure optimal value creation for all stakeholders. We estimate that BNI ROE will gradually increase to above 18% by 2025. The main underlying assumptions are: one is healthy and quality loan growth with CAGR of 10% per year. Second, we continue to make a mix shift low-risk customers and promote solutions beyond lending that generate superior fee income. Fee income will be higher than 25% of total revenue in 2025. Third, we also expect gradual improvement in operational cost efficiency with the cost-to-income ratio to be below 42% by 2025. This will be achieved through digital transformation and agile business models. Fourth, asset quality is the main priority, with the optimal level of NPL being strived to reach a percentage below 1.5%, so that in the long term, the credit cost will be able to approach 1% in the next 3 years. I would now like to turn the presentation over to Pak Silvano, our MD Corporate Banking, to highlight some upgrade on corporate transformation and also wholesale business. Pak Silvano, please.
Thank you, Pak Royke. Ladies and gentlemen, good morning. As we stated earlier, we're currently rolling out a corporate transformation program as an important foundation of our corporate plan until 2025. As you know, we've made several important progress, and that includes throughout last year, we've consistently acquired top-tier corporate clients in resilient and selected sectors such as FMCG, telecommunications, mining, and services. We will continue to optimize this strategy because the room is still ample for BNI. These acquisitions were followed by optimization of other businesses from the entire client ecosystem, so not limited to just loan growth. In the SME segment, we launched Expora, which targets the businesses of SME exporters and diaspora, with service excellence that focuses on developing the production and operational aspects of medium and SMEs, as well as business matching with global markets through optimization of our overseas branch network. Within 3 months of the implementation of Expora, we observe already more than 2 trillion rupiah of financing that we provided to export-oriented medium and SMEs. And we've built so far 7 Expora hubs throughout Indonesia to support this program. On the retail side, we have been accelerating our digital transformation through strengthening our mobile banking, as well as optimizing the B2B and B2C ecosystem through APIs. We've also strengthened our beyond lending business capabilities by promoting our cash management platform, including BNI Direct. We've also strengthened our capital markets and investment banking platform in BNI Securities and the establishment of BNI Securities in Singapore. On the other hand, we are also in the early stages of developing an independent digital bank that supports inorganic growth. Our efforts to strengthen our capital are carried out through the issuance of Tier 2 bonds and additional Tier 1 capital securities in 2021. And the impact of this is that our Tier 1 has been improved to the level of 17.7%. Further, to provide a solid base, we strengthen our fundamentals as reflected in our cost of funds, which we were able to reduce to the level of 1.6%. And of course, our asset quality have continued to improve. Ladies and gentlemen, Bni is committed to align our business with ESG principles. We have institutionalized ESG into a formal committee led by Risk Management Group to monitor the initiative and the execution. We try to accommodate as many ESG framework as possible, which fits with Indonesia banking landscape, and make sure that the frameworks are aligned with OJK guidelines on sustainable finance action plans. In monitoring the result, one indicator that we have been using so far is MSCI ESG rating, which now for us stands at A, the highest rating amongst Indonesian banks. On environmental aspects, we have already incorporated environmental aspects into our underwriting standards and practices. Specifically in palm oil, we require new palm oil borrowers to have RSPO or ISPO certification, and around 40% of our borrowers are already ISPO or RSPO certified or in the process of obtaining certification in the near term. In the coal sectors, our borrowers must have either gold, green, or blue category from the Ministry of Environment and Forestry. Bni does not provide loans to business owners with a red or black ratings. At the moment, there is no specific timeline imposed on banks in Indonesia regarding new coal financing policy and palm oil RSPO, ISPO full compliant policy. This is understandable as these sectors are still crucial for the economic development, and it has continued to bring a significant social impact to the community. However, we will take serious initiatives to be at the forefront of Indonesian banks in terms of managing exposure and policies relating to coal and palm oil sectors. As we are shifting our wholesale banking portfolio into top-tier corporate clients, margins will naturally be lower as well. However, in the long term, we believe this strategy will deliver sustainable and less volatile profitability due to better asset quality that will translate to lower credit costs. In addition, there are other sources of profitability coming from fee income and low-cost funding potentials. Last year, we successfully increased our CASA to loan ratio in corporate banking from 52% to 67%. Our fee income contribution to total revenue also improved and now stands at almost 20%. These levels are far from ideal. We will continue to invest in our wholesale transaction banking digital solution, as well as sharpening our capabilities in value-added services beyond lending. A quick look into recent trend of our wholesale loan book. Manufacturing sector showed a significant pickup in loan demand during the last quarter, followed by infrastructure and telecommunications. The next presentation is about our financial highlight, and it's going to be delivered by our CFO, Ibu Novita Widya Anggraini. Ibu Novita, please. Thank you.
Thank you, Pak Silvano. Ladies and gentlemen, now we will discuss the 2021 financial result in more detail. On the balance sheet side, we We were in ample liquidity situation on 2021 with third-party funds grew by 15.5% year-on-year and loan growth at 5.3% year-on-year. And on the P&L side, our cost of fund right now is around 1.6%, and it's significantly reduced from the 2022 by 1 percentage point. Our lower cost of fund has enabled us to not only to grow sustainably by targeting a low risk, low yield segment, but also to partially help NIM recovery by 20 basis point year-on-year to be at 4.7% on full year 2021. Non-interest income grew moderately at 12.8%, supported by across-the-board improvement in client transaction activities. Profitability and efficiency, our cost-to-income ratio improved by 80 basis points to be 43.3% last year, despite significant investment in human capital and corporate transformation agenda. Healthy loan growth, margin recovery, and cost-saving initiative has enabled our PPOP to grow by 14.8% year-on-year. Full year PPOP at 31.1 rupiah trillions was all-time high level, even 10% higher than pra-pandemic PPOP. On the asset quality, our cost of credit was set at 3.3% as compared to 4.1% on 2020. Despite lower credit costs, we managed to boost loan at risk coverage to 37% by end of year of 2021. Thanks to conservative accounting policy, as well as continue improvement in loan at risk, which declined by 5.4 percentage point last year. Tier 1 capital increased to 17.7%, while total capital adequacy ratio or CAR ratio reached 19.7% as a result of sharp profit recovery with 10.4% ROE booked last year, as well as the issuance of Tier 2 and additional Tier 1 capital securities. Last year, our loan growth at 5.3% was relatively in line with our with industry growth rate. The key driver in our loan growth was private sector corporate at 7.6% year-on-year, large commercial at 10.4% year-on-year, subsidized micro loan KUR at 35% year-on-year, and consumer loan at 10.1% year-on-year. It is worth to highlight again that large commercial segment started to grow again on the back of asset quality getting more stable, as well as strong demand from manufacturing and agriculture sectors. During fourth quarter 21, pressure on rupiah loan yield was smaller than in the first 9 months of 2021, except for a small segment where the loan yield contraction came as a result of delayed payment for KUR subsidy from government. Last year, net interest income grew by 12.4% year-on-year, thanks to strong funding inflow that enable us to cut deposit rates and save more than 6 trillion in interest expense. The slight contraction in the interest revenue was due to portfolio mix shift to lower yield assets. First, the composition of interest earning assets shift more toward bond and banks placement as we are building stronger liquidity buffer. Secondly, within our loan book, we shifted toward less risky borrower and segment. Non-interest income grew by 12.8% year-on-year due to recovery in retail transaction activity, as well as our deliberate effort to focus on non-lending product to wholesale client to generate fee income. For example, trade service fee grew by 8% and syndication fee grew by 37% year-on-year. Cash recovery income jumped by 66.7% year-on-year. If we net it off with provisioning expense, then net credit cost would have been around 2.7% or 40 basis point below reported gross credit cost. As we already expected in the previous analyst meeting, there will be a positive trend in the terms of recovery income, and we believe this trend to continue. Operating expense grew by 12.3% year-on-year, mainly from personnel expense, which grew by 31% year-on-year. The sharp increase in personnel expense was strategic decision by management team to build strong talent base in order to ensure the success of our transformation agenda. There was no increase in the number of headcount during 2021. Provisioning expense declined by 70% year-on-year, despite higher loan loss coverage ratio. Please note that the quarter-on-quarter increase in provisioning expense was only for the sake of being prudent, with rising Omicron case across the globe. The fundamental asset quality indicators such as loan at risk was indeed continuing to improve during the quarter. Bottom line profit increased by more than threefold to 10.9 rupiah trillion, which we believe in above consensus estimate. And next presentation on third-party fund liquidity update will be delivered by our Managing Director of Treasury and International, Bapak Henry Panjaitan. Please, Pak Henry.
Thank you, Winovi. Ladies and gentlemen, in Bbni, we were seeing encouraging trend of strong liquidity inflow, especially during the fourth quarter last year. On quarter, we received more than 60 trillion of third-party funds, despite of lower rate on time deposit by 10 until 25 bips than in the third quarter. However, on asset side, even though there was loan demand pickup during the last quarter of 2021, we still ended up with massive excess liquidity, which we temporarily park it mostly in banks placement and some in short-term fixed income instrument. On one hand, the situation I just described resulted in short-term margin compression, where quarterly NIM was only at 4.4%. However, in medium-term horizon, it means that we have a formidable liquidity reserve ready to deploy when loan demand pick up or when bond market turns to more favorable. In other words, we will have more flexibility to manage our net interest margin during uncertain interest rate environment this year. Cost of fund on the fourth quarter last year slightly improved by 8 bips, driven by reduction in time deposit rate, effectively by 21 bips quarter-on-quarter. Yet we were still seeing strong inflow of third-party fund, not only time deposit, which grew by 10% quarter-on-quarter, but also CASA at 8.7% quarter-on-quarter. As our liquidity remains ample, we make further rate cut on January and February this year. Interest rate on high-tier business saving counter rate, which total amount is around 25 trillion, is reduced by 115 bips, as you could see on the gray line of the bottom right chart on your screen. Interest rate on high-tier saving account is also reduced by 40 bips. This high-tier saving account nominal amount is around 29 trillion rupees. Lastly, we also lower time deposit rate by 25 until 35 bips to be 2.25%. We hope our strategy will translate to margin improvement in the first half this year. As a result of stronger than expected fund flow to our bank, loan to deposit ratio declined to 79.7% by December last year. This is a very healthy level of LDR to begin the year of 2020, low LDR level will allow us to be more flexible in navigating the rising interest rate environment in order to optimize our margin. Liquidity position as measured by liquidity coverage ratio and net stable funding ratio at the top of the slide remain strong. Next presentation about asset quality, risk management, and loan restructuring will be delivered by our MD of Risk Management, Pak David. Please, Pak David.
Thank you, Pak Henry. Ladies and gentlemen, as expected, the total amount of COVID-restructured loan continued to decline. The biggest improvement quarter on quarter came from our corporate segment, especially from customers in construction and electricity, gas and water sector. As of December last year, COVID-restructured book represented 12.4% of total loan, with the majority of these borrowers have already started regular installment payment. This could be a proxy that default rate from this restructured loan could be very low once the OJK relaxation will be removed by April 2023. Total loan at risk on December last year was 23.3%, down from 25.2% in September 2021, and declined quite significantly from its peak at 28.7% in December 2020. The improvement in total loan at risk was driven mainly by improvement in collectibility 2 ratio, as well as restructured collectibility 1. Considering initial concern on asset quality during the third quarter of social and mobility restriction, this improvement in every component of loan at risk was a positive surprise to us that led to lower provisioning expense. Despite good economic recovery and encouraging trend on asset quality, we still built higher loan at risk coverage at 37% and NPL coverage at 2.3 times by December 2021. As the world is still grappling with Omicron, we prefer to maintain the coverage level more or less at this level. Combining it with expectation of gradual reduction in loan at risk, it should translate to material reduction in credit cost this year. Next presentation on digital initiative will be delivered by our MD of IT, Bapak YB Haryantono. Please, Pak YB.
Thank you, Pak David. Ladies and gentlemen, digital transformation is crucial not only to stay relevant in the business, but also could be a game changer to win the competition in the longer term. Besides taking an early initiative toward digital bank development, we keep executing organic growth on our digital transformations within the Bbni itself with 3 focus areas, which are to digitize the internal platform, develop digital native products and modernize existing services, and to leverage digital ecosystem with API open banking. For retail, we continue to elevate our mobile banking applications. The number of Bni mobile banking customers continue to grow by 38.9% year-on-year, reaching 10.9 million users, which is bigger than most other digital bank app users in Indonesia. Our strength and advantage compared to peers is the completeness of features in it. The number of transactions made through Bni mobile banking was 434 million in 2021, an increase of 43% year-on-year. Furthermore, transaction value in the fourth quarter reached 160 trillion rupiah, surpassing our ATM transactions. For further improvement, our mobile banking users will have complete financial and lifestyle features, personal financial management, and SME solutions integration. Besides retail customers, we also keep improving our products and services for our business banking clients through digital platform as well. For business banking clients, Bni offer its cash management flagship product called Bni Direct, available in both mobile apps and web-based.
To facilitate transaction of our wholesale clients, we also developed an integrated portal called bnitps.id, where customers could do various types of transactions, such as payment management, collection management, value chain management, and open banking solutions. Even this platform has covered our subsidiaries products and services. One example of our key features, often getting complimented by our clients, is the integrated taxation management platform within the BNI Direct itself. For SME clients, BNI Direct can be a powerful platform, not only for regular banking transactions, but also for export-import transactions, including bank guarantee, foreign exchange, and trade services. Number-wise, we still see strong momentum of our wholesale cash management platform with 17.8 year-on-year growth in the number of users, with also a significant of 115.3% growth of transaction numbers. This led to the growth of transaction value that reached 14.2% year-on-year. The spike in the number of transactions is due to the increasing contributions of our digital clients, namely fintech and e-commerce. More importantly, the room for growth is still ample, as the penetration rate of our clients is 21.5%. Ultimately, the question is, what is the impact to us? Are the results in line with the efforts to boost transaction from customers? In this slide, we show that other than fee income, better customer experience in doing transactions ultimately brings sticky CASA, which enables us to maintain or even expand our margin. Nowadays, 55.6% of our saving balance comes from regular mobile apps users. This percentage is much improved as compared to only 44.6% a year ago. For current account, 89% of it comes from cash management users. These current accounts stay with us because of the convenience to do transactions and not sensitive to the interest rate we are offering. As a result, our year-to-date cost of fund for current account is only 1.27% until December 2021, as compared to 1.9% a year ago. Overall, this should help our bank to maintain leadership in low-cost funding, to support the long-term strategy that our CEO already explained, which is shifting asset mix to lower-risk customers, to generate superior fee income and credit costs in order to deliver sustainable best-in-class ROE. This is the end of our full year 2021 result presentations. The next moderator will coordinate for the Q&A sessions. Thank you.
Thank you, Bapak dan Ibu, for the insightful presentations. Ladies and gentlemen, we are now entering the Q&A session. If you have any questions, please send it to our email, ir@bni.co.id, or you can send your question with Bahasa Indonesia or English in the Q&A section on your Zoom apps. You can use the interpreter button if the answer is delivered in Bahasa Indonesia. The first question that we have received is probably the trending topic in the market recently. And I suppose it will be best if Pak Royke could give us the insightful explanation for this. The question is from Angus McIntosh from Smart Karma and Baruna Arka Setio from Bahana Sekuritas. The question is, what's the latest update on BBNI inorganic growth related to digital banks? Please, Pak Royke. Thank you.
Thank you. Can I? The latest update that we had just published the announcement, the acquisition plan last week. We acquired a majority share of Mayora. The transaction value will be 3.5 trillion, equivalent to 2 times PBV multiple. The acquisition plan will need shareholder approval, the upcoming AGM, and OJK approval. Any other subsequent transaction related to change shareholder composition will be covered in the separate announcement. I think this is the latest update. Dan we still negosiasi, selagi negosiasi dengan tech partner, ada beberapa, tapi ada yang paling serius mungkin teman-teman bisa tebak, dan ini memang adalah kunci nanti di digital business ini, karena bagaimanapun juga kita akan fokus di SME. Fokus di SME itu nanti akan mau nggak mau transaksinya besar, banyak, dan resikonya juga cukup tinggi, sehingga kita lihat bahwa kita harus punya teknologi yang bagus supaya mengantisipasi resiko, bisa memitigasi resiko dengan baik, dan operating cost-nya rendah. Ini yang paling penting supaya kita bisa masuk di pasar SME lebih agresif lagi. Karena kalau dilihat di bank di Bbni, kita memang agresif di SME, terutama di program pemerintah di KUR. Tapi kalau di
program
tradisional SME, nah disinilah memang portfolio kita relatif tidak terlalu besar. Dan kita lihat ada opportunity untuk membangun, dan kita punya value chain dari corporate client yang tier 1 corporate client juga kita punya opportunity untuk mengembangkan. Dan kita lihat juga e-commerce bisnis juga cukup menarik untuk kita tap dari situ. Itu perkembangan terakhir.
That is the last updates.
Okay.
Thank you for the clear answer, Pak Rege. And the next question is still regarding the digital bank, Pak. The question is still from Angus and also from Baruna. What is BNI's view of the digital banking environment, and do you see that the new banks taking shares from the existing mainstream banks? And if so, in which areas do you see the most impact? Please, Pak Rege.
Saya rasa tadi udah saya jelaskan ya, bahwa yang agak berbeda mungkin kita lihat banyak digital bank yang ada sekarang ini. Kita lihat bahwa digital bank yang existing, yang ada di market, kelihatannya sebagian besar itu dengan cost of fund relatif cukup tinggi. Dan yang menarik dengan kombinasi dengan BNI adalah digital bank BNI. Mudah-mudahan kita punya juga kesempatan opportunity untuk lending dengan funding yang relatif cukup rendah, dengan cost of fund ini. Dan memang nanti yang tadi saya sampaikan, kita di tradisional SME itu sangat kecil perannya, banyak dilakukan dengan program KUR. Nah, masih banyak lagi potensi SME yang belum di-tap oleh BNI, yang harusnya kita bisa lakukan dengan cara yang berbeda, dengan cost yang relatif rendah. Ya tentunya kita harus memakai teknologi.
Relatively cost.
Pak, dia mau nambahin, silakan.
Yeah, thank you, Pak. If I may add, I think maybe let's just see on the Indonesian customer behavior. I think here in Indonesia, mostly the people will have more than a relationship with one banks. Yeah. So if we can divide it into two, the first bank they bank with is the bank that they trust. Yeah. They put the portfolio and doing transaction with that bank because they trust the bank. The second relations they have is that banks that based on the benefit they're having. Yeah. So people put the money transacting with that bank because the benefit that they're having, and they put their money as on needed basis, yeah, because of the benefit, high interest rate, or any discounts that the bank is giving, yeah. Even it's not just banks, but also for e-wallets, yeah. This is the behavior of the consumer. So two types of behavior. When we see of the Indonesian banking landscape itself, yeah, as you know, Indonesia has more than 100 banks. Yeah. So and also with the new digital banks coming in, it will be more banks to come into the banking landscapes. But when we are talking about the digital bank itself, it is not just new. The digital bank already been in the country for a few years already, and we don't see actually a significant increase of the market share of them. Yeah, if we goes back seeing about what happened in the 1 to 2 decades in Indonesia, the top 4 banks gaining market share consistently, growing higher and higher in the market share. Yeah, and then we see that with the many banks that already been in Indonesia, these top 4 banks still growing their market share. When we check on our own data in BNI itself, yeah, we see that just like what we show you just now, the growth of transactions, the growth of users on our digital channels is already been growing tremendously. Yeah, so we see that the traction of disruption of digital bank itself doesn't really disrupt the banking relationship with traditional banks like us that is doing also digital transformation and giving digital proposition for our customers. Yeah, so we see that with all this new player coming in, it gives us a good flavor of competitions in the market. But knowing with all the development that we are doing, the transformation that we done, and we also see the result on the data that also we show to you just now, we are very confident on seeing the competition in the futures with all the new fintechs, new digital banks coming in. I think maybe that's our view. Thank you.
Thank you, Pak Royke and Pak Yebe, for the clear answer. Ladies and gentlemen, I remind you once again that you can click the interpreter button and choose English if the answer from our management is delivered in Bahasa Indonesia. The next question is from Sarina Lusmana from CLSA, still regarding the digital bank. The question is, on digital bank joint venture, will the joint venture require to do asset cleanup of the legacy loan in Bank Mayora? Pak David, would you like to take this one, Pak? Thank you.
Okay. Thank you, Sarina, for the question. On this asset cleanup, on the issue on the asset cleanup in the Bank Mayora, we actually did the due diligence and quite comprehensive and deep due diligence, which covered a majority of the loan book. And we have also been assisted by one of the big 4 accounting firms when doing the due diligence. And based on this due diligence result, the potential NPL under our conservative scenario is much well below 5%. And most importantly, that there is no requirement to book any material additional provisioning to the book, as the provision coverage is considered sufficient. Hence, the acquisition will not have any adverse impact to our overall asset quality. Thank you.
Thank you, Pak David. The next question is regarding the right issue. The question came from Jaden Vantarakis from Macquarie. The question is, what is the latest with the right issues plan in terms of size and timing? Does the state budget have room for an equity injection for BNI, or are there other priorities for the government? Ibu Novi, would you like to cover this question, Ibu? Thank you.
Thank you, moderator. We expect the government will allocate around 3.5 trillion capital to participate if we do a right issue. So we expect our amount of right issue is around 8 trillion up to 11 trillion on the size, including government portion. And the timing should be in second half of this year. And maybe I will explain more detail about this right issue. Our right issue plan is right now our balance sheet is strong structure balance sheet, and we are doing prudent growth our business with focus on sustainability performance, and we are not seeing any near-term risk of having inadequate capital, as our profitability should be improved over the next few years, and we just successfully issued AT1 capital last year. And however, we should also note that as an SOE, we might have limited flexibility in terms of capital raising. So we need majority shareholder support and commitment. This time around, we are grateful that government is very supportive with our capital raise plan. But we should take advantage of this rare opportunity. And having a slightly bigger capital is beneficial for us in several ways. And it allows us to do flexibility in our business plan. One of them, which you might already hear, is related to digital bank development. If the business plan of the digital bank works and the bank grow in the future, we may need more capital injection to prepare. And we want to anticipate the risk that emerging market is usually at risk of US taper tantrum, and it might also impact its credit rating. We estimate that the impact of Indonesia will be more moderate that we had in the past. We need to prepare the worst case. For example, if the sovereign rating get downgraded as the result of macro volatility, it may result in significant increase in the risk weighting of our exposure to government and may affect our credit rating. But we want to ensure that there is no intention to use capital raising to provide for prior bad loan book. We have been doing multiple exercise to get the best understanding of our asset quality, including by conducting survey to up to 19% of our borrowers. And so far, the evidence we have are pointing to one direction, which is better asset quality outlook in the absence of massive external risk, such as prolonged pandemic. And maybe that's it, moderator. Thank you.
Thank you, Bu Novi, for the comprehensive answer. The next question is probably one of the highlights in the market also. The question came from Ariana Paramita from Sinarma Sekuritas. How will BBNR utilize the possibility of Bank Indonesia rate hike to boost loan growth? Pak Silvano, would you please answer this one, Pak? Thank you.
Okay, thank you. So, we think BI rate hike is usually followed by lending rate adjustment. The magnitude of lending rate adjustment could vary from just enough to cover the increase in funding costs, or if the market backdrop is very strong, rate hike could translate into higher NIM, which is, of course, the best case scenario. Now, we do not want rate hike to hurt our clients' capacity to repay their obligations, because we're looking to optimize our customers' lifetime value, not only short-term profit opportunity. So any lending rate adjustment will be done on a selective basis. Another way to mitigate rate hike impact to our margin is by having higher CASA from our clients' transactions in BNI. And so the increase in lending rate might be imposed mainly for those clients who do not transact with BNI sufficiently. Now, our cost of fund, as you know, is right now is very competitive among Indonesian banks. We could use this cost of fund advantage to gain lending market share in the industry during rate hike cycle, as most banks in Indonesia might not have as much flexibility as we do in terms of not only the level of funding costs, but also in terms of room for expansion or improvement. Now, I just want to reiterate again what I've mentioned at the beginning of the presentation, that in corporate banking segment, we have increased our CASA to loan ratio from 52% to 67%. in the past 12 months. And this is one of the examples that of the progress that we've been making in terms of building a stronger CASA franchise. Now, in our 5-year corporate plan, if I may reiterate our CEO explanation earlier, we aim to have best-in-class ROE on a sustainable basis. So we do not want to see profit volatility from time to time, as we have observed in the past. Now, to achieve this, we have to gradually build a good low-risk customer base. This is very important. A good low-risk customer base that have resilient business model and proven to survive various economic turbulence in the past, as well as very good reputation and character, which is probably equally, if not more, important. We're fully aware that by doing this strategy, our margin might not look the best among peers, but it will be compensated by lower credit costs as well as room to boost fee income prospects. Thank you.
Thank you, Pak Silvano. Still from Ariana, the next question is about Expora, and we believe Pak Iqbal can give us some color for this question. Pak Iqbal, would you please explain to us the latest update on Expora? Thank you, Pak.
Okay. Thank you, Ariana. As previously explained by Pak Silvano during his presentation, Expora has been one of our future engine growth in advancing SMEs. 6 months after the launch, Bbni Expora has promoted almost 600 SMEs to go global, and we have channeled for about 2.4 trillion rupiah of loan to them. Apart from lending, we also develop SMBs capacity through trade expo and training, supported by several agencies, entrepreneurial association, and e-commerce. As an update, Bbni Expora has just started a collaboration with Shopee, one of the leading global e-commerce players, to facilitate our SMEs to tap into export market, especially ASEAN and Taiwan. In addition to that, with the support of our overseas branches and the Indonesian embassy networks, we continue to accomplish a number of business matching to connect our customers with the global buyers. So far, we have succeeded in connecting our SMEs with buyers from South Korea, UK, Philippines, Malaysia, Hong Kong, Japan, and Singapore. Thank you.
Thank you, Pak Iqbal, for the clear answer. The next question came from Talia Riyadi from Indo Premier Investment Management. Any forecast rate for NPL rate this year? Pak David, would you please cover this question, Pak? Thank you.
Thank you, Talia, for the question. For the NPL overall loan at risk, right now we feel much more comfortable with the asset quality situation, and we believe that the worst has been behind us. As of December 2021, the asset quality, as we mentioned before, continued to be resilient and improve. Loan at risk has declined quite significantly from 28% to 23.3% of the total portfolio, which is 5.4% lower year on year. And improvement is also across all components. NPL improved by 60 basis points year on year to 3.7%. So for 2022, we think that NPL should improve close to 3% or below, which is supported by broad economic recovery and stringent underwriting process. And we could also mention here that 89% or 90% of our COVID restructured book is considered low risk, because these borrowers already started regular installment payment. So we think that the possibility or the potential of the downgrading of these borrowers quite minimum. And also additionally, around 75% of our loan at risk book is in the economic sector that has shown and indicated recovery and pick up demand. So we think that the 2022, our NPL and loan at risk should improve quite significantly. Thank you.
Thank you, Pak David. Ladies and gentlemen, the next question came from Well Done. When you say assets shift to low-risk customers, can you clarify which is the low-risk segments that you are targeting, and what is the percentage of each segment of total book that you are aiming for? How fast this will happen, and will we see strong growth of this low-risk segment this year? Can you also clarify the impact alone on 2022 net interest margin due to shift low-risk segments? And do you see that does your NIM guidance given already include the assumption of 50 basis points Bank Indonesia rate hikes? And what is the sensitivity of each 25 basis point Bank Indonesia rate hike to our net interest margin? Pak Royke, would you like to take this one, Pak? Thank you.
Thank you. Untuk aset yang low risk customer,
For
kita
low
memang
risk
dari tahun lalu
customers,
sudah
from
mulai
previous year
emang shifting ke
have been
sebagian
shifting
besar
since last
untuk
year.
ke low risk customer, antara lain ya top
Bbni
tier.
has
Top tier
shifted
itu
up
kan adalah
to low risk customer to
top tier
tier
client itu adalah
companies,
yang kita anggap risikonya rendah, ya,
which we believe
dengan
have low
transaksinya
risk
cukup besar
and
dan
quite
potensi bisnisnya
high
cukup besar.
transaction
Jadi
and high
kompensasi dengan top tier
potential
dengan
business.
bunga relatif rendah,
And we can
tentunya kita akan
compensate
mendapat kompensasi
the
bisnis
low
dari
interest
transaction-nya.
rate.
Makanya
However, we
kita
can
juga
gain more fee-based
mentargetkan ke
income
depan
for
kita
their
akan
transaction.
kita punya fee base akan cukup besar dari situ. Nah, itu di segmen wholesale. Kalau di retail
In
kita
wholesale
tentunya
segment,
payroll.
from our
Payroll
retail,
bisnis ini juga
we
sesuatu yang menarik
rely on
yang kita
payroll
lihat punya
since
potensi
we believe
besar,
it is quite
terutama klien-klien kita
attractive.
yang besar-besar yang punya
It came from
jumlah
the employee from
employee-nya
our
cukup
top
banyak
tier
dan payroll-nya
companies.
yang bisa kita dapat, dan ini adalah satu yang resikonya relatif rendah. Yang juga mungkin bisnis ini
also,
subsidi mikro, ya, kur juga termasuk bisnis yang relatif resikonya rendah.
We believe it
Nah,
has
ini tetap
quite low
kita
risk.
pertahankan bisnis ini, tentunya dengan
We
cost of fund
managed
yang
to maintain the
kita
business
kompensasi bisnisnya juga tetap kita akan kejar untuk menurunkan juga cost
and
of
we
fund
still maintain
ini. Dengan
to
value chain
compensate the low
top tier client ini juga
interest
akan membantu untuk
and to
menurunkan
add
cost of fund
more
kita.
chain from the top tier
Yang tadi mengenai
companies.
NIM, tentunya NIM sudah kita perhitungkan ya
Net interest
di dalam
margin has been
perhitungan
calculated by us
dengan kenaikan suku bunga 50 basis point ini
due to
kita
the hike from
yakin
interest rate
ini
for 50 basis
sudah
points.
kita masukkan di dalam perhitungan NIM yang
We also calculated
kita
the impact
targetkan di tahun 2022. Demikian.
to our targeted NIM in 2022.
Thank you so much, Pak Royke.
Thank
The
you.
next question came from Joshua Tanja from UBS. The question is, can we get more color on the very low effective tax rate in full year 2021, about 13% only? And in the fourth quarter of 2021, tax credits. Is this something that will be continued in the first quarter of 2022 and full year of 2022? Bu Novita, would you please answer this question, Bu? Thank you.
Thank you, Joshua. I will answer it in bahasa.
Thank you, Joshua. I will answer
Bahwa
this in
di
bahasa.
tahun 2021 ini memang
In 2021,
ada pemberlakuan tarif pajak baru. Ini karena
the
di
new
bulan Oktober
tax
2021
implementation.
ini sudah disahkan satu undang-undang harmonisasi peraturan perpajakan,
There is
di
a
mana
new tax
sebelumnya
regulation.
kita dikenakan di
Previously,
Undang-Undang Cipta Kerja sebelumnya, kita itu
Bni has been
harus
taxed.
sudah membentuk deferred tax aset pajak sebesar 17%.
We have to
Dan
manage deferred tax
karena ini multiple years,
asset
jadi kita
in 17
bentuknya
years.
dua tarif rate, jadi 17% dan 19%. Nah, dengan berlakunya
With this new
undang-undang
regulation
harmonisasi perpajakan yang
implementation,
baru ini, maka yang sebelumnya sudah kita hitung 17% sampai dengan posisi
the
November,
tax we have
ini
calculated
kita
with
reversal apa
17%
yang sudah pernah kita bentuk deferred tax asetnya. Nah, ini yang menyebabkan
will
ada
become our
one-time income
deferred tax
terkait
asset.
dengan pajak. Nah, ini yang menyebabkan
Therefore, there is an
tax rate
income
kita turun
related to
signifikan.
tax.
Ini memang berlakunya hanya 1 kali, yaitu penyesuaian pada saat
However,
sampai
it
dengan
only
2021.
happens
Selanjutnya nanti
once.
tidak ada lagi reversal di deferred tax asset ini,
In the future
karena sudah
comes,
berlaku
there will be no
tarif pajak yang
reversal for
single.
this
Nah,
tax.
kemudian yang kedua, ini bisa dibilang bahwa ini akan berlaku seterusnya sepanjang kita memenuhi peraturan. Ini ada
And the
kaitannya
19%
dengan
will be
pemberlakuan
applied as long as
PMK
we could
nomor
fulfill
18
the
ini
requirement.
mengenai Juklak Undang-Undang Cipta Kerja juga, PMK nomor 18 tahun
PMK
2021,
number
di mana
18
atas pajak
2021
setelah untuk cabang-cabang kantor luar negeri ini bisa
that for
dibebaskan dari
overseas
pajak, namun harus memenuhi
after tax
syarat-syarat tertentu.
income
Jadi syarat-syaratnya tersebut adalah 30% dari laba
could be cut as
setelah
long
pajak
as
kantor luar negeri
30%
tersebut
of our
itu harus
overseas branch
diinvestasikan ke
could be invested,
Indonesia dengan
must be
bentuk
invested in
instrumen
Indonesia
tertentu selama 3 tahun. Nah,
for
tentunya
3
apabila
years.
kita follow peraturan ini dan kita konsisten,
As
di
long as
mana
we fulfill this
cabang-cabang
regulation
kantor
and
luar negeri
consistently,
BNI ini banyak sekali tersebar di negara lain. Jadi ini
since we
memberikan
have various networks
opportunity
in
buat
overseas
kita
branches,
laba atas cabang luar negeri tersebut dibebaskan dengan pajak
we
asal
maintain
kita
to have
memenuhi persyaratan
fulfill the
30%
regulation.
dari income tersebut
Therefore,
kita
our overseas branch
investasikan di Indonesia.
income
Jadi untuk yang kedua
could have
ini
lower
ini
tax.
sifatnya sustain. Mungkin demikian dari saya. Terima kasih.
Thank you, Ibu Novi. And ladies and gentlemen, as we are reaching the end of our analyst meeting today, we hope that we have delivered our financial results for the 2021 to all the attendees. Any questions that have not been answered, our investor relations team will gladly accommodate the answer for you. If you need further information, please contact us at ir@bni.co.id. We would like to express our gratitude for your participation today. You may now leave the webinar room. Thank you, stay safe, and have a great day.